It is 7:45 on a Wednesday morning. Wei Ming, 29, primary school teacher, Tampines, is eating chicken rice at the hawker centre downstairs. $3.80. He has eaten here 4 times this week. He earns 4,167 Singapore dollars a month, before CPF. After CPF, $3,302 reaches his account. By the end of every month, he has roughly $1,200 left over, sometimes more, sometimes less. He is not struggling, he is not comfortable, he is somewhere in the middle that Singapore does not talk about much. Tonight, he is going to sit down and answer the question his cousin asked at a family dinner last Sunday. His cousin earns $9,000 a month. The question was not rude. It was worse than rude. It was genuine. How do you actually live on that? Start with the number that most people never calculate. 50,000 Singapore dollars a year. 4,167 a month gross. After employee CPF at 20%, $3,302 lands in his bank account. But here is what his cousin does not see. His employer simultaneously contributes another 17%, $708 a month, directly into Wei Ming's CPF. That money never touches his bank account. It does not feel like money, but it is. 1,541 Singapore dollars flow into his CPF every single month. Over 10 years, at 2.5 to 4% compounding across his ordinary, special, and MediSave accounts, that is a retirement foundation being built invisibly while he eats $3.80 chicken rice. So the real question is not how he lives on $3,302 in cash. The real question is what those $3,302 actually buy, and what they do not. Housing is the decision that determines every other number. Wei Ming rents a master bedroom in a 4-room HDB flat in Tampines. $1,050 a month. The flat belongs to a couple in their 50s. 2 other tenants share the common areas. Attached bathroom, air conditioning, a desk, a bed, a wardrobe. $1,050. That is 32% of his take-home. Tight, within bounds. The alternative? A 1-bedroom condo in Tampines costs $2,500 to $2,800 a month. 85% of his entire take-home. He knows 2 people who tried it. One moved back to his parents after 8 months. The other now teaches tuition on weekends to cover the rent and has not slept past 7 on a Saturday since. The master bedroom in Tampines is not a compromise. It is the decision that makes every other number in his life work. His action the day he started this job. He opened Property Guru, filtered by master bedroom, sorted by non-mature estates. Tampines, Bedok, Hougang. He visited 4 rooms in 1 weekend, picked the one with the best landlord, signed a 12-month lease. That single afternoon determined whether his finances work or not. Food is where Singapore's inequality disappears every morning. Wei Ming spends $640 a month on food, hawker centres for breakfast and lunch 6 days a week, chicken rice at $3.80, char kway teow at $5, laksa at $5.50, economy rice with 2 vegetables and 1 meat at $4.80. At the hawker centre near his school, a full lunch costs him less than the delivery fee his colleagues pay for the exact same food sent to their desks. Saturday evenings, 1 sit-down restaurant once or twice a month, $30 to $50. His one visible indulgence. $640 a month is what a single person in Singapore can eat extremely well on. Maxwell Food Centre, Old Airport Road Food Centre, Amoy Street Food Centre. These are not budget options. They are some of the best food in Asia. They happen to cost $4 to $7 per plate. The version of Singapore where food is expensive is a different city. The one where people order Grab food 3 times a day and never notice the delivery fee is higher than the meal. Transport costs, Wei Ming $130 a month. MRT from Tampines to Bishan, 41 minutes direct. Easy Link. He tops it up and does not think about it again. Grab on some Saturdays, $30 to $40 across the month. He has no car. He has priced one many times. A Toyota Corolla in 2026. $168,000 after COE. Monthly total: loan, road tax, insurance, petrol at $3.40 per litre, parking, ERP, servicing, $2,318. That is 70% of his entire take-home cash for one vehicle that sits in a school car park during teaching hours. He will not own a car on this income. And the moment he accepted that, everything else became manageable. His remaining fixed costs look small individually. They add up fast if you stop watching them. SIM-only mobile plan, $22. Electricity and water, his share, $70. Internet included in rent. Gym, $0. He runs at Tampines Eco Green on Tuesday and Thursday evenings. 3 streaming subscriptions split 3 ways with friends, $12 each. Groceries for home breakfast and occasional cooking, $180. Total fixed costs outside housing and food, $384. Net surplus after all of it, $1,200 every month. Wei Ming's action when he moved in. He listed every recurring charge: phone, electricity share, subscriptions. He cancelled 2 services he was not using: a fitness app at $19 and a cloud storage plan at $8. $27 a month. $324 a year. It took him 11 minutes. $1,200 a month. Here is exactly where it goes. $600 into a high-interest savings account at 2.3%. His emergency buffer, now at $7,600. $300 into Singapore savings bonds every month. Government-backed, 2.11% average over 10 years. Redeemable any month with no penalty. He started 18 months ago. His SSB holding, $6,200. The remaining $300 stays as buffer. Dentist, the annual trip to Johor Bahru, new shoes when the old ones wear out. He does not have an investment portfolio yet. What he has is a system. Spend predictably. Save before the month starts. Let CPF compound without touching it. His action tonight? The same action available to anyone reading this. Open internet banking. Find Singapore savings bonds under investments. Set up a recurring transfer of whatever your minimum is. $500, $300, even $100. It takes 8 minutes. The government pays you every 6 months. You can pull the money out any month if you need it. There is no reason not to start this week. Now the honest accounting. What $50,000 a year does not cover. He cannot buy property alone. Not yet. Under HDB rules, single buyers can only purchase a 2-room flexi or resale flat, and only from age 35. Wei Ming is 29, 6 years away. When he gets there, with 6 years of CPF OA savings and the Enhanced CPF Housing Grant of up to $80,000 for first-time buyers earning below $4,500 a month, he can afford a 3-room resale in Jurong West, Woodlands or Sembawang. Median price in those areas, $400,000 to $450,000. The CPF covers the down payment. The mortgage at HDB's rate of 2.6% over 25 years, roughly $1,200 a month, within the 30% MSR limit on his income. The path is narrow. It is there, but the math changes entirely with a partner. Combined take-home of $6,600. Access to a 4-room BTO in non-mature estates. Mortgage servicing ratio of 30% on combined income. $2,000 a month on the loan. At 2.6% over 25 years, that supports a loan of $420,000. The math of Singapore housing is couple dependent. A loan on $50,000, the path is slow. Together on $100,000 combined, it opens significantly. Wei Ming's action now, 6 years before he can buy, he is tracking CPFOA balance monthly. He knows the exact number he needs for the down payment. He knows the town. He has decided the flat type. The decision in 6 years is not made in 6 years. It is made now in the choices he is already making. There is a healthcare structure underneath all of this that most Singaporeans on this income never think about because it works silently. His MediShield Life premiums are paid entirely from MediSave. He has never paid cash for MediShield Life. The government takes 8% of his gross wage into MediSave, and it quietly covers his hospitalization insurance for life. Last year, he went to Tampines Polyclinic for a respiratory infection. Subsidized visit? $14. Medication included. He paid $14 and went back to work the next morning. He does not have an integrated shield plan yet, the top-up that covers Class A wards or private hospitals. He has priced it, $240 a year for a standard B1 plan at his age. His MediSave can absorb $300 of that. Cash outlay, roughly $40 annually. His action this month? He is adding the IP. Not because he expects to be hospitalized, because $40 a year in cash for Class B1 coverage is the most efficient insurance purchase available to him right now, and he has been putting it off for 2 years for no reason. The social pressure is the part no financial calculator captures. His cousin earns $9,000 a month. University classmates in tech and finance earn $12,000, $15,000, $20,000. The Telegram group where they plan trips to Japan assumes a budget Wei Ming cannot match without depleting 3 months of savings. The birthday dinners at restaurants where a main course costs $45 happen every few months. He goes. He orders carefully. He does not say anything. Singapore has a documented phenomenon researchers call money dysmorphia. HDB flat owners with $800,000 in net assets report feeling like financial failures next to colleagues in condominiums. Teachers on $50,000 feel behind classmates who entered banking. The reference group shifts continuously upward, and the benchmark for enough moves with it. Wei Ming's actual financial position at 29. $1,200 in monthly cash savings, $6,200 in SSBs, 0 consumer debt, CPF compounding at $1,541 a month without him doing anything, and a clear path to a property purchase at 35. By Singapore's own data, MOM Labour Force Survey 2025, he is in the bottom 40% of full-time employed residents by income. By any rational measure of financial health for a 29-year-old with no dependents and no debt, he is ahead of most people his age in most cities in the world. The cousin's question assumes that $50,000 a year in Singapore means survival. It does not. It means operating in a specific economy, hawker centers, MRT, HDB rooms, and making deliberate choices inside that economy every single day. Wei Ming finishes his chicken rice at 8 o'clock, $3.80. The hawker uncle has been at this stall for 22 years. Wei Ming has been coming here for 2. He picks up his bag, walks to the MRT, taps his Easy Link card. 41 minutes to school. He will spend today teaching 11-year-olds mathematics. Tonight, he will sit down and type out his answer to his cousin's question. Not as a defense, as a calculation. $50,000 a year in Singapore is not the number that determines your financial future. The number that determines it is what you do with the $1,200 that is left after the choices you have already made. His cousin earns $9,000 a month and spends $8,900. Wei Ming earns $4,167 and saves $1,200 every month in cash, plus $1,541 invisibly in CPF. Same city, different economy, different finish line. If this video gave you a number you can use, subscribe. Next, what a Singapore salary of $100,000 a year actually looks like, and why the jump from 50 to 100 changes less than people expect.